Good morning. Welcome everyone to the Ultimate Trading webinar for beginners. My name is Danny and I will give you the webinar today. Okay, and we will begin with the introduction, as we said, to AvaTrade. So as many of you know, we are here since 2006. We are a regulated company. We have 9 licenses worldwide. In case you got a question or a query along your journey, you can easily contact our customer service right here at the bottom left to chat with us, or via the WhatsApp, or directly through cs@avatrade.com. This is everything's related to the customer service. You're welcome to contact. And regarding trading, we can assign a senior account manager to give you full support through the process on the trading side. So we've got customer service for customer service and a senior account manager to assist you with trading in terms of risk money management, in terms of analysis, in terms of all kind of things that's related to your strategy. Okay, we're not going to write down everything, but everything that's under the trading umbrella, a senior account manager should be able to assist. And this service is very helpful and doesn't cost anything extra. So I recommend to check with your eligibility via the customer service if you haven't got a senior account manager yet. Okay, now we're going to write down the platforms that we have, even though we're going to have the webinar on the web trader, which doesn't require you to download or install anything since it's embedded in the website. And you can access this platform just by logging into avatrade.com with your email and password. We also have the app. It's called the AvaTrade trading app. We'll maybe put that one at the bottom because we're going to carry on with it anyway. And we've got the MetaTrader 4, MetaTrader 5, Ava Futures, Ava Options, and lastly, Ava Social. Okay, we're going to speak a little bit about Ava Social and how it works, since this is a webinar for beginners, and Ava Social can be very, very helpful. How so? Because in Ava Social, you can also do copy trading. Okay, how does that work? Okay, how exactly does that work? So let's suppose that we're trader A. As you guys can see, we have 10,000 in the balance. This is a demo account that we've got. So we are trader A and we can copy trader B. Why would we want to copy someone else trading? Because as a beginner, I'm not always sure about my strategy and how I'm going to do everything, what I'm going to analyze, okay, the proportions of the positions that I need to take. So all of that, I can learn on the way while copying another trader. This way, my account will open positions and open and close positions automatically based on trader B. Furthermore, I can also, if for instance, I'm copying a trader that has a balance bigger than mine, let's say 20 or 50,000, it would make sense that my account might not be able to withstand the same positions, the same strategy. So what I can do in the app is I can also define to go for a smaller lot size. This way, my margin requirement is smaller, and I can contemplate and understand if this strategy is something maybe I would like to use to its full extent, and maybe increase my balance, deposit the necessary amount, or I want to keep it as it is. Okay, so I think this is very helpful. The app itself is free to download, so I'd recommend everyone to check it out anyway, even if you want to do copy trading or not, even if you're a beginner or not, and it can be very, very useful. All right, so if you've got any questions till this point, guys, about anything that I said, feel free to fire away. This webinar is live, as I said in the beginning, and it gives you the opportunity to ask what questions you've got along the way. Okay, we're going to focus on the menus to the left. We're going to fold it down, clicking on the arrow, clicking on the X, and we're going to focus on the menus to the left. We're going to start from the top. So in here, 3 lines. In here, in this 3 lines button, I can get to my personal area. And in here, I can modify and I can access my account details, create a sub account, and just my personal area basically. In here is where we are at. It's trade. To get to trade, you can also click on the icon and then you get back to here. Underneath, we've got positions. We've got also orders, history for history. In the history tab, if we click, we can also select the range of what we want to be displayed. Underneath, under history, we've got signals. So we're not going to speak about it too much today, but just to get the general concept, the way that it's constructed is we've got the name of the instrument. We've got various categories in here. If we go to the right, we've got a type, whether if it's a buy or a sell scenario. Quickly, just understanding the general concept, when I'm buying something, it doesn't matter what, I always want the value to increase. So if we look at Dow Jones as an example, and currently the value is 44,941, we can see that the entry price is lower. Okay, this is a buy, and we've got the take profit, which basically what it does, obviously we're going to elaborate about those a little bit more moving forward, but I want to just have the core idea of how it works. So pending orders triggered by reaching a price and closing the position automatically. I should have wrote down closing or opening a position automatically because we can also automate the ordering, but at the moment we're going to focus only on the stop loss and the take profit. So take profit and stop loss, what they do is, let me maybe write it down a bit differently. Triggered when reaching the price, closing and closing the position with a profit. So this is for take profit, and what stop loss does is almost the same, but the other way around, right? Triggered when reaching the triggers, maybe would makes more sense. There we go. And with a loss. This means that using the signal, we're gonna use automated analysis, pre-made analysis. I'll show you if we click here, view signal. Okay, so in here, we've got the analysis that was done by the Trading Central, all made for us. And we can see the take profit and the stop loss from the outside. But if we scroll down, we see that also here at the bottom. And this is based on what? On the levels displayed on the chart. So if we'll look into here and we'll dig a bit more thoroughly to what was done here, we will understand that based on those support and resistance, which we'll learn about more moving onward, we've got the take profit and the stop loss. That does what? That does what we wrote. It does is the take profit close the position automatically with a profit, and stop loss automatically with a loss. Okay, this again already made for us. We can change the time frame for something that makes a bit more sense, and then adjust the chart like this. We can clean the drawing, maybe put a rectangle to help us understand the profit area. Since this is a buy, our take profit is 45,040, and entry will be where we are. So this will be the the entry. We'll maybe switch to days. And the same thing with the, okay. Didn't turn out as I expected, but it doesn't really make a lot of difference. The reason that I'm doing what I'm doing at the moment is solely to show you guys the functionality of the signal. Therefore, it doesn't need to be beautiful, just to help us understand. Okay, now this will be green, and actually the bottom one will be red. Great. Now, this is how the signal looks like at the moment, okay? We haven't done anything special. This was made for us. Let me show you again. I can exit this and this will stay. We'll go back. Okay, all I did is I clicked in here, view signal, and then I clicked on buy, and here we are. Okay, this already made for us. We can make the necessary adjustments, and if we don't want to, we can just launch the position as it is. We can also fix the lot size if we want, and we can also adjust the prices that we prefer. Okay, and we can carry on. And at the moment, I don't want to speak too much about the signals, just to give you the general idea. What I want to show you today will be overprotect. Okay, but before we do that, I also want to show you the rest of the menus, and then we will explore overprotect. So in here, if I keep going down, we have here the news section. So what we saw, the signals are basically technical analysis based, and as we saw, what's displayed on the analysis there was support and resistance, and this is under the technical analysis. In here, what we're looking at is the news section. In the news section, we also have different categories. What we're looking at now is the pre-European market brief, and we see that there are some things related to stocks, bonds, and commodities. To be more specific, if I finish scrolling down, we see here at the bottom for latent instruments, and in here we see crude oil, gold, Bitcoin, and pound. Great. Now I know that this article related to those things. Obviously, if I will select something else more specific into cryptos, I might discover things related to cryptos and so on. Underneath, we've got here discovery, and in discovery, we also have the analysis views, market buzz, forex features ideas, economic calendar, and trading calculator. If we click here on market buzz, we can see that in market buzz we have those circles with different variety of instruments that we can select from, also divided to different categories. Also allows us to choose, as you can see, what's in the middle. Open door at the moment is with the most mentions. This is why it's the biggest and it's in the middle. We can also make it a list. And if we click on open door, we can see that open door at the moment is divided to a different variety of articles. What if I don't want to go through all of that? I can also filter what I want to focus. So maybe rating lowered or price target raised. Any of them that I will select will filter them out of the list. Currently, that's what appears. And we have different parameters in here that we can see, and okay, that can be helpful for the analysis. This also can be useful in terms of fundamental analysis. So basically, when I'm doing any kinds of analysis, we have two types of analysis, as I like to say, which is technical analysis and fundamental analysis. Just a second. Okay. Technical analysis will be as we saw, the numbers, basically the statistics, the averages, the different levels of support and resistance, pivot points, and so on. Technical, basically how things are moving, right? We're analyzing the technical things, we're analyzing the levels, support and resistance, and with that, we are trying to optimize our analysis. Okay, and fundamental analysis will be the news, will be the articles, will be also the governmental The reason that I'm writing it like this, okay, is because everything that the government, any kind of changes that the government makes in terms of the economy, even if it doesn't have immediate effect, it still has ripples. So if we click in here, okay, so this was the, as we saw, the market buzz, and if we keep going down in discovery, this globy icon here, then we've got the economic calendar, and in the economic calendar, okay, it's already filtered out. I'm going to clear the selection by clicking here on the reset. Now we're back to default. And we can also extend the range of what we see by clicking on the date, then clicking on the date that we want. And with this blue column, with this blue trail on our dates, we now know what is selected. And we see that this is a little gray. There is this gray font here, and there is a white font in here under the red line. And also, if we look at the way that it's constructed, we've got the time, we've got a country, we've got the event, and in here we've got the importance. So this is how strongly we think that this will affect on the market. In here, in the actual, we've got the result. So obviously, all of those things above the red line, we see that those are results. So those events are events that happened. And in here, we've got the previous, we've got the forecast. This is what happened last time, and this is what we expect. Now, if we see that we've got the result, and we keep scrolling down, we see that the red line separates events that didn't happen to events that already happened. And this is why we've got the results. So, and you can see that this is a little brighter than what we see at the top. Furthermore, if I don't want to see everything, let's suppose I want to focus on the dollar and maybe on the Aussie dollar also. So I've selected only those two. And what we're going to get is only Aussie and US dollar news. And we've got medium, low, and high. Let's suppose we want to focus only on the high impact events. And now we've got only high displayed. On top of that, I can also search for a particular event through this tiny magnifying here. And lastly, the thing that I want to show you on the economic calendar, since we don't always get a chance to remember specifically when was the event and to prepare to do the analysis and to prepare to trade, what I can do is simply book this into my calendar by clicking on the tiny calendar icon in here, and then I can book it into my calendar, which allows me to focus on my day, and then I get the reminder specifically when the event's supposed to happen, and I can directly go to the economic calendar, do the analysis, see the result, and go to the market and do whatever I wanted to do. So this is something that I think it's great. I recommend everyone to use. Apart from that, you can explore by yourself. And the last thing that I want to show you before we begin the second part, I know that everyone wants to get there already, but there is one thing I wanted to show. And for that, we're going to click on the AvaTrade to go back to the default screen. And in the default screen, we're going to just maybe click on commodities, maybe click on metals, and also maybe gold. Okay, and then we'll click on the arrows to expand the chart, and then we'll click buy or sell. And now we see this golden shield here. What this golden shield does is it basically allows us to protect the position for a certain time frame. So we're gonna type here ever protect. Okay, the reason that I added that is because AVA Protect at the moment is for Forex Gold and Silver, and the way that it works is very, very simple. AVA Protect allows us to protect the position for a certain time frame. whatever we lost during that coverage will be returned, and we will be okay. We'll put it separatedly. There is a fee when using the product. And how does that work? Let's suppose that at the moment we see that gold, we're looking at daily candles, and we're getting right back to where we were in the previous resistance. As you can see, if we click here, place a timeline, maybe price line also. So we see this is around here. And with AVA Protect, we can protect the position. What that means is it means that whatever amount we lost during that coverage will be returned to our account. Only what we lost during the coverage we will get back. It's important to understand that. If we click on the golden shield or click here to enable the box, it allows us to choose what time frame we want to cover. Let's say that we want, at the moment, maybe we'll try 1 hour, and we see that the price, the fee for 1 hour is $37.35. We are with a buy, so we can click on the take profit, click on the stop loss, maybe make the at the moment it's on 3423, so maybe we can extend it by 50, and maybe we can also subtract 50 from the current. So this will be the same ratio. So we've got 3373. Okay, so again, 3423. And since this is the current price, okay, and in here, this should have been 70. This way we get the same ratio. Okay, great. Now, with this in mind, we see that the proportion between the fee that we're going to pay to the profit and the loss that we can potentially make is reasonable. How so? Because again, the purpose here is to protect the position, and whatever we lost during that coverage, we will get back. Okay, so if God forbid if we have lost this amount, we're going to pay $37 as a premium, and we're going to get that back. Great. If we click here on the plus to expand the coverage, expand it to the max, which is 2 days, that means that during those 2 days, okay, during those 2 days, if we cover the position for 2 days, it means, as you can also see, there is expiry here. If the position gets closed by the stop loss and we're losing 250, again, the premium that will be paid will be 116, but we will get back 250. Okay, great. Again, the proportion is still maybe reasonable, but if I would set a target that will be closer to the entry, okay, let's suppose that we'll go for maybe $20 away. So if it's only $20 away and we're paying a premium of 116 and we can potentially lose 100, that means that this doesn't quite make a lot of sense. Why? Because the fee here is meant to allow us to protect the position, and the possible loss is bigger than the fee. So it's not too great. The reason that I'm showing you this comparison is for you guys to be able to use this product efficiently. I used another example the other way around for the profit. Now, if I set the profit like this, and the profit here, possible profit here is 95, great. But if I'm using the product to protect the position, I'm paying more than I can make. So it doesn't quite make sense. If I reduce to 1 hour, now it does. It's also important to know that the time coverage is not the only factor that affects the fee. Another thing I want to pay attention is also the lot size. For instance, if we're at 5, So this will be the price. If I'll take it to the minimum, now it's much lower. Now if I'll increase to 2 days, we've got $23. However, we can also pay attention to here and to see that if we'll increase it, this was 0.05, so let's make it 0.5. Now the fee is much, much bigger, but the take profit and the stop loss will be just a second, will also increase as a result of that. Okay, and we can make this comparison. Now, again, you can explore the product by yourself. It was important for me just to introduce that to you. Of course, there are different variations of how to use this product, and the core idea was something that I wanted to explain. Also, I will repeat the fact that we're only getting the losses during the coverage, and if we choose to keep the position open, naturally, we're not going to get the partial amount. Okay, only what happened during coverage and not after. If we keep it, so we need to consider that as well. And one more thing, this time cannot be extended when expired. That means if I have selected 1 day and I clicked buy, and in 1 day I want to add another day, this cannot be done. It cannot be done. I need in advance to know what's the length that I'm planning to cover. Okay, so if there are any questions, as I said previously, guys, feel free to fire away. We're finally ready to begin the practical part, the second segment. And for that, we're gonna clean the drawing here. You're gonna click on the X, click on the arrows, and begin from scratch. And in here, this is the default screen. We're gonna click here to go back to the default. And in here, we're going to select one of the instruments to analyze. We'll maybe click on commodities again, but maybe this time agriculture. Maybe this time corn has a signal. Let's see how it looks like. And we'll click on the arrows to expand the chart. And that doesn't look bad at all. Okay, so corn, from what I know, has been bearish for the past half a year. So let's switch to weeks. And yeah, that's exactly what we're seeing. It does look like a sell, but first, before we dive into business, I just also want to go through the tools in here at the top so we can know how to customize the chart to look the way that we want. So firstly, we're going to click buy or sell. We'll click on sell, and we'll set the lot size to 0.01 because we can always increase to what we want. In here with corn, we see that next to the search bar, we've got here the time frames. And in the time frames, we can select from 1 minute up to 1 month by scrolling down or clicking and scrolling with the tab toggle to the right. In here, we can choose another instrument. Maybe we can, let's say NASDAQ, you can click in here and it will be displayed. Keep in mind that when you're choosing the search button, if you're doing it like this, like me, you need to pay attention that the right instrument is displayed. When we selected NASDAQ, we also need to click buy or sell to display the right instrument and not corn, which is now. Now it's corrected. So if I keep going to the right, and we saw the search bar, we saw the time frames, and here I can select change the candles to maybe a line. As you guys know, there are certain things that the line is not allowing us to see, that candlesticks might give us better depths of data. As you can see, this is hidden from the line. If we'll switch to the line, it's not exist. Okay, next thing, if we go to the right, we can click here on the crosshair, enable the crosshair, and now from getting no data from the chart, we will get the data with the crosshair enabled, followed by the horizontal and vertical line. If we keep going to the right, we can add more charts, maybe 2 charts or even 3 charts or even 4. Okay. If we keep going to the right, we've got the indicators, and keep going all the way to the right, we've got here the all kind of helpful things. And maybe we'll keep it like this, and we'll start. Okay, we have to do something, even if it's basic, just to understand the way that this can work. This might be a bit difficult to do from here, so we will straighten that up. And also looking at weeks, just a brief look at months. Okay, yeah. Okay, great. Great. I'd rather use you know what? Let me really do it the old-fashioned way, as we say. Okay. Everyone can use whatever they want for this process. Some people use Fibonacci, some people are doing it manually like me, but the point here is to just remember the key levels that I want to focus. When I scroll up and down, it makes the chart zoom in and zoom out. If I click here on the column price, it allows me to squeeze the chart up and down. This way I can scroll up and down and get the precise picture that I want. I think I had enough lines, so this will suffice. This will suffice. Okay. All right. If we click here on the arrow, click here on the trend line at the top, we click here at the top, click here at the bottom, then we can see the differences in price. We see that corn moved, sorry, moved 50% from 824. This was when? This was on April. Okay, and in here, if we see the, sorry, that's not what I was looking for. What I was looking for is the past half a year. So we're going to switch back to weeks. And this is more relevant for us. Okay, great. And again, same thing, trend line. Okay, we see that it moved roughly 20% from the peak. Maybe we'll drag it up a little bit. Okay, and it went considerably down to the level that we see at the moment. Now, this makes me think that corn still has a little bit way down. The support that we see is, maybe we'll add a note. Okay, maybe not. The support that we see is 386. This is where I place it, and another one at 507. And we can target something if we think that does Protect work on any time frame. As I've explained in Protect, we can choose the coverage time frame from 1 hour up to 2 days. This is currently what we saw in the webinar and not something permanent. So I suggest you will check it and see what works for you the best way. Okay, so if we go back to business, we see that this is the support line that we've marked. So maybe we'll paint it in not exactly red, but something like this. And what we want to do is we think now that this is a sell, since we see this is a bearish movement. We click here on the sell, we set again the load size to 0.01, and now we can think what price to target. So as I've explained in the beginning, when we are buying, our intention is that the value will increase. But when we are selling, it's the other way around. We want the value to decrease. This is why this will turn green. And we can target from where we are at, which is 401. We can click here to automate the entry. So we've learned that there are pending orders. There are pending orders that triggered by reaching the price, and take profit and stop loss are closing the position, getting to the price. Execute when price hits actually opens the position. So we can automate the entry and we can automate the closing. So if we are at 400 and the next line is 368, how far away is that? Who knows? $32, right? Let's see. So we're going to write down a few things to be more organized. We've got here corn. We're going to set also a target. And in here, we've got entry $400. And we've got take profit and stop loss. Now, stop loss and take profit, we can position them based, unfortunately, no. Modetus, I think this is the minimum. 1 hour. Again, it's not permanent, but this is what we have at the moment. So take profit can be 368 is the support. So I assume that it would make sense to go a little higher since it might turn around beforehand. So 380 makes sense to me. We're going to paint it in green. We're going to also paint this in something else like white. And we will switch from weeks to days. Okay, now with days in mind, if we zoom in, we can see that the price that we targeted, 380, okay, if we're looking at days, we need to know that this price is realistic from where we are at. This $20 gap, we want to know that it can be closed in a reasonable time frame. Okay, how can we do this? First of all, in the take profit, we're going to place the numbers that we said, 380, based on support. So this is between the support to the current price, and we've got the stop loss. We'll make it the same ratio, but we'll fix it afterwards, of course, the same way we do in here. So this is based on resistance. Okay, basically when I'm saying support and resistance, what I'm referring to is actually edge points that we can identify on the chart. So if we switch back to weeks, and we obviously see, if we'll use an oval here, we can see that at the peak, this is the price that we selected. And in here, if we'll go to the previous point at the bottom, we see that the point at the bottom, something got stuck in here like this. Great. We've got in here at the top, we've got in here at the bottom. Both of those lines are marked, and we can see that if we look at the peak, we see 507, at the bottom 368. But I don't want to target specifically those prices. I want to target something in between. Okay, so this is obviously not even in our, it's not relevant for the time frame we're currently analyzing. What's more relevant would be maybe if we'll switch to days. Okay, what can be more relevant will be the maybe 425. This is more relevant than what we saw. The 507 is quite far away, right? So we've got this. We've got this resistance. This is another way to explain support and resistance. Resistance and support can be found in any time frame and suit to your needs, just like I'm doing currently. So this is a level that we've got on the third, okay? And I think it's more relevant for us than what we had half a year ago. And since the resistance is 425, I also want to choose something that is not exactly the resistance, but something before that. So instead of choosing 425, we'll go a little lower and maybe go for 420. Okay, we can also see that during the weekend, 2 weeks ago, it did go through those prices. So I have a reason to believe that if it exceeded that prices, it might carry on up. This is why I wouldn't want to keep my position open. Okay, now let's clear some of the things here so we can work. We'll get rid of this, we'll get rid of that. We'll click here on the rectangle, click in here, click in here. This will be our loss area, and at the bottom we're going to have the profit area, just like this, painted in green. Great. And now we've got those levels covered. So we see that we are $20 away from the entry, and we can make $20. But my account has $10,000, and I'm not going to target making $20. What I would want to make is, let's say $500. And I also need to think about how long to hold a position, since we see that this price is not something that corn was at yesterday. Basically, we see that the statistics of corn being on that price was a long time ago, long time ago. Not too long, but definitely not a day and not a week ago. In this case, I want to stay as realistic as I can, and I want to see how many days on average will it take to get to 380 from where we are. If I just roughly in here look at the size of this candle, and I'll point on the candle, I see that the open here is 420 and the close is 403. So this is roughly $17 that it moved in a day. But how many candles like this big guy we see in here? Not a lot. So I need to validate that the price that we choose, 380, is relatively realistic to the time frame we're analyzing, and it's not going to take too long to get to. So I think the time is something we need to validate, maybe with an indicator. How we can do this? Let's click on the FX indicators and type the filter. We'll type AVE, and then we'll click and drag it to the right. Now we can choose how many candles we will withdraw the average from. 14s means 14 days. 10 mean 10 days. So we're going to keep it on a week and a half with 10 days. We'll also change the color to yellow, and we'll click on save. And at the moment we see that the current movement for corn per day is $5.50. So if we targeted $20 away, and we see that the average is 5.4. Okay, my question is, let's also write the movements here. Movements 5.4 based on 10. Yeah, based on 10 days. Okay, daily. So my question to you guys now is, how many days will corn take to move $20 if it moves 5.4 per day? Who knows? I'm not looking here for an exact answer, right? I'm just looking to make sense with the price that we're targeting. So if we look at the statistics of corn moving 5.4 per day, okay, excluding the fundamentals, because fundamentals can definitely make things more dynamic. So what we can do is we'll take the 20 divided by the daily average movement, and we see that it can take 3.7 days. It can take 3.7 days. Honestly, I would even say up to a week, if I'm being cautious. Up to a week. Okay, so what I'm going to do is I'm going to write here 1 to 7 days. Great. Now, with this in mind, with this in mind, we're gonna also add here the units. Okay, since we're making $20 and the actual target is $500, my following question will be how many corn units we need to sell. Okay, what we can do is we can go target divided by movements equals units, and if we divide the actual movement we're expecting, we'll also write it down. Okay, then we get 25. Okay, great. So we did 500 divided by 20 equals 25. How is this helpful? Now, if we increase this one to 25, we should be able to make what we wanted to make. Okay? And that's very, very good. What we're going to do is we will fix also the possible profit and possible result. So we've got here possible profit. In here, we've got possible result. And we are great. So at the moment, we've got this position covered. And from here, we can begin. This is not the end. This is not the end. This is not where we are ready to launch the position. This is where we can begin. Okay, before I recap, are there any questions about anything that I've explained? Any questions, anything that doesn't make sense, anything at all? To keep it like this. Okay, so we've got a question from Anuka. The question is if we should keep it under the same ratio. The answer to that is this is something you can choose, but most probably not. What we would like to do is we would like to fix this ratio to be maybe a bit different. So let's say if we're looking at potentially losing similar amounts, 500. So this is a possible profit will be 500 and possible loss will be also 500. What we can do is we can maybe adjust it to be ready for diversification. And that means that this is something that currently from my balance 500 is 5%. Okay, and in here 5%, also 5%. So how can I adjust my exposure from 5% to 2.5%? Who knows? How did you get the average graph below? All I did to get the average graph below is to click on the indicators, click on the AVE, average true range, and in here I modified the 14 that was by default, and I clicked here on save. Now I've got it, and it's showing me per day because we're on days. And if this would have been a week, this would have been showing me a weekly movement, which, by the way, just look how amazing we are. The 19.792, and we said that this can happen in a week, right? Just look at the average movement. Just look at the average movement per week. It matches. What does it matches to? It matches with the prices that we targeted. Okay, to happen in a week, not in a day. We switch to days to do the analysis, but it seems like it makes sense. If we switch back to days, it goes back to 5.4. Okay, and also I wanted to say, guys, this is extremely common, and maybe I could also say recommended to do analysis to various time frames. I know that sometimes it's a bit difficult and sometimes it's a bit time consuming, and we would like to maybe only analyze one time frame, and that's great. But as you saw, since we started from months and then we analyzed weeks, and now we specifically focused on this area for days. So it's very common to switch between time frames to get a clearer picture. Now, what Anuka asked about the ratio is very important. As we can see, we can potentially make and lose the same ratio, okay, of 1 to 1. Now, with this in mind, if I will diversify and I will multiply the same ratio that I'm working with now, but let's say 4 or 5, okay, let's suppose by 4. Okay, so this ratio here, this 500 possible profit, possible loss of 500, yeah. This, if we take the same ratio of 4 positions, we get to 2,000 and 2,000, right? Again, taking the 500 multiplied by 4. So this, what I will look at if I will choose to diversify with the same ratio. If I adjust it to 2.5 for my exposure, so this needs to be 250. Now, this is based on what? This is based on if we go movements times units equals possible profit or loss. Okay, and this means that if I want it to be 250, I need to divide by movement by 2. So if I can also reduce the lot size, but if I reduce the size of my position, then my profit will be minimized as well. But if I take the stop loss closer onto the entry, then what happens? Okay, we only reduce the exposure. Okay, so sorry, this should have been, I moved the wrong line, so we're gonna keep it like this, and we're gonna drag that down, drag this down also. Okay, and great. Now we see that we are on the right. Okay, we need to fix that also. And now we see that we are at 2.5%. The reason that we're not seeing it flat is because the market is volatile and the spread is affecting the possible loss, but this should have displayed 250 and 250, and in here this will be 2.5. What this gives us is actually that we will be looking at potentially making 2,000, potentially losing 1,000. Why would I want to work with a ratio? Okay, what Anuka asked about the ratio, why would I want to have this kind of strategy and not a strategy that I can lose and gain the same amount? Because at the moment, if I have 4 positions and these positions altogether can make 2,000, and I have 4 positions that altogether can lose 1,000, I can maybe compensate myself from the losses with the profits, and then I can have harmony moving onward with my strategy, making the necessary adjustments. Okay, there is a question from Avanele. Will we receive a copy of this recording? This is maybe the most common question received on this webinar, and thank you for reminding me. We don't send the recording of this webinar, but all the webinars can be found in our YouTube channel. Okay. Unfortunately, our time is nearly done. What I wanted to tell you is with pleasure. With pleasure, I'm happy that you asked it, Anuka, because diversification is a very, very powerful layer that we want to have in our strategy, and it's important to know how to make those adjustments. What I wanted to say is the procedure that I'm doing, that I showed you today, is to help divide into steps and to capture a certain technique. That means that in the beginning we roughly estimated a trend. As we moved, we implemented some lines here, some more things to help us assess and analyze. Then we wrote down the target. We've placed the lines roughly just on what we saw. And as we moved forward, we adjusted the levels, we adjusted the stop loss and take profit. We also adjusted the stop loss twice to make sense in terms of the ratio. We also adjusted the lot size because initially we only made $20. So the point of me telling you this is we can begin from somewhere and we can improve and improve and improve. It doesn't need to be, to go crazy, from the get-go. Question before we say goodbye. I'm gonna go through the questions in here. Do I have to pay to copy trade, and will there be a webinar on copy trading? I believe so. I can't give you the exact. I mean, I wish I knew, but I don't know in advance what will be the fee for you to pay to do copy trading. I suggest you'll download the app because it's free anyway, and you can download and explore. And before you agree, you need to go through the numbers and see that it makes sense. Guys, and unfortunately, our time is up for today. I really hope that what we've learned today is something that can be helpful for you to implement in your own strategy. You're all welcome to join us to tomorrow live Q&A. Until then, I wish you all best of luck with trading. Have a fruitful week and have a good day.